We recently learned that Kecia Steelman has replaced Dave Kimbell as the president and CEO of Ulta Beauty. So should we be worried or excited? What does this change mean for investors and what does it mean for the company? Well, let's go through our 7-step analysis process to try to answer those questions. Previously, Kecia Steelman served as the COO and has been with the company since 2014. Before joining Ulta Beauty, she held roles at Family Dollar, Home Depot, and Target, which is currently in close collaboration with Ulta Beauty. This company is the largest beauty retailer in the United States with around 1,385 stores. It plans to open 200 more stores and grow its loyalty program membership to 50 million by 2028. So some ambitious plans. And such plans cost money. That is why analysts believe that the next 2 or 3 years can be really hard for Ulta Beauty. But before we concentrate on the future, let's take a look at the past. If you invested $1,000 in this company 10 years ago, you bought 8 shares. And today, they would be worth something close to $3,301. And that is a gain of 230% in 10 years. That is really nice. So let's see who benefited from this growth. Individual insiders, that is an X, 0.2% of the company is owned by individual insiders. And we would like to see this number over 2%, so unfortunately the management does not have its skin in the game. And are individual insiders buying? That is also an X. We saw a number of sale transactions in the last year. And do super investors own this company? That is a check. 4 super investors have this company in their portfolio. And are they buying right now? That is an X. Last quarter, Berkshire Hathaway sold 96.5% of its investment, just about 3 months after adding it to the portfolio. Okay, now it's time to take a look at the fundamentals of this company. Return on invested capital, that is a check at 28.3% 10-year median returns. And we want to see this number higher than 10%. So that is a magnificent result. And what do we know about net profit margin? It is a check averaging 9.5% over 5 years. And the sector median is 4.4%. So Ulta Beauty is using its scale very wisely to generate profits. And now let's take a look at share buyback. It is a massive check. In the last 10 years, they bought back 26.9% of shares. So long-term investors own a bigger portion of the company without any new investments. And the debt? It is a check. They can pay their debt in a matter of months with their current free cash flow. And we only see a short-term debt without any long-term debt at all. But financial health of a company is not everything we should be concentrating on. We also have to consider its growth. Revenue growth, that is a check at 15.4% 10-year compound annual growth rate. And we would like to see this number higher than 10%. So that is a good result. Free cash flow growth, that is a check at 26.2% in the last 10 years. So very impressive. And earnings per share growth, that is a check at 23.5% in the last 10 years. So the growth of Ulta Beauty in the last decade was really great, especially when we consider that it is an organic growth, They don't use debt to grow, and they don't use new shares to finance it. And I have to say, it is one of the main reasons I really like this company. Ulta Beauty does not currently pay any dividends. Considering its focus on organic growth and share repurchases, I think this is a wise decision. The company aims to open new stores and expand into other countries, as they recently did with Mexico. Not paying dividends helps them fund these initiatives organically without worrying about changing interest rates. I believe this approach is both safe and smart. Price to earnings ratio is 16.5. That is quite nice, especially when we compare it to the S&P 500 average, which is around 27.9. But to properly calculate the intrinsic value of this company, we will use a discounted cash flow analysis. And if you would like to know how to value companies by yourself using 4 most commonly used models, then head over to stockinvesting.academy and choose our company valuation course. Okay, so first we have to make some educated guesses about the future of this company. So in the low scenario, we will estimate a growth of 4% for the first 5 years, and then 6%, in the medium 8%, and then 7%, and in the high scenario 13%, and then 12% growth. So the low scenario is close to what some analysts predict, and that is a decline in the next 2 years, and then a slower growth than the industry average, which is around 7.2%. Those predictions are based mainly on a belief that 2025 will be a transitional year, with Ulta Beauty investing in initiatives to strengthen its market position and growth. Medium scenario is showing a story in which Ulta Beauty will grow with the industry, and the high one is closer but still a bit lower than the growth we saw in the last decade. So with such estimates, the intrinsic value in the low scenario is $330, in the medium $402, and in the high scenario $579. But we have to always apply a margin of safety to those prices, and I use a 30% one. With such a margin, we get in the low scenario $230, in the medium $281, and in the high one $405. And the current price is around $418. So only the high scenario without the margin of safety is in the green. Well, depending on which story do you believe in, it is either expensive or close to fair value. But before we make any investment decisions, let's try to put everything we learned into perspective. Ulta Beauty had a very nice growth in the last 10 years. It has almost no debt and is buying back shares on a massive scale. On the other hand, we have some unknowns like the new CEO or beauty trends and consumer preferences that can change very fast and definitely influence the business. That is why in the valuation I wanted to show 3 very different scenarios, because all of them are possible. But that means that it is not a simple decision. It is not an obvious investment, even though it may end up as a very good one. Ulta Beauty is a solid business, and I don't think that the new CEO will make any major changes, especially since she has been involved in creating this company for quite a while. That said, Ulta is now a more mature business, so there should be more focused on international growth and strategic partnerships like the one with Target. But let's open our Stock Ranking Pro, which you can get access to by becoming a patron, and let's take a bird's eye view of this company. And if we sort the ranking by return on invested capital, Ulta has the 14th best result. If we look at share buyback, Ulta is 11th. Years to pay debt, 21st place. So it is definitely up there with some strong companies. But what is really important is the stability of this company so far. Let's look at some historical graphs. Revenue, very nicely going up. Free cash flow, well, it has some bumps, but overall the trend is very positive. And earnings per share, also a steady growth, except only for 2021. So it is going to be super interesting to watch. Will this stable but fast organic growth continue? Or will the new CEO make some changes that in the long term will create serious problems? Let me know what you think. Thanks for watching and see you in the next one.